Palantir Technologies, which is listed on the Nasdaq Stock Exchange under the ticker symbol PLTR, has been one of the most talked about technology firms this year. The company specializes in data analytics, and it has consistently drawn attention not only from investors, but also from television personalities such as Jim Cramer, who frequently discusses the stock during his morning show. His ongoing admiration for the company is not unexpected when you consider the remarkable performance of Palantir's stock. Since the beginning of the year, Palantir shares have surged by more than 108%, making it one of the standout performers in the market. However, it is important to note that the stock has faced some short-term setbacks. Over the past month, shares have fallen by approximately 2.5%. This decline followed a short seller report that questioned the validity of Palantir's valuation, especially when compared to the valuation of OpenAI, a major artificial intelligence firm. Cramer's commentary on Palantir has been strong and filled with conviction. He has gone as far as to describe Alex Karp, who serves as the chief executive officer of Palantir, as one of the smartest leaders he has ever encountered. His praise has often been direct, and his tone makes it clear that he views Palantir as a highly important player in the technology sector. Earlier this year, Cramer also addressed the negative report published by Citron Research. The report expressed doubts about Palantir's value, but Cramer dismissed the bearish claims. He warned investors not to underestimate Palantir's growing influence in artificial intelligence and data analytics, pointing out that attempting to short such a strong company is an incredibly risky move. While the short seller community has raised questions, the market has shown continued enthusiasm about Palantir's future. On Wednesday, Palantir's stock moved higher again as optimism surrounding its artificial intelligence-driven platforms and the company's consistent stream of government contracts gave investors more confidence. Palantir's ability to secure high-profile contracts with government agencies has been one of the strongest drivers of its momentum, since these agreements often highlight the company's capabilities in national security, defense, and other mission-critical areas. At its core, Palantir is best known for two major software platforms, Gotham and Foundry. Gotham is widely used by defense and intelligence organizations, while Foundry is a platform that helps commercial clients integrate and analyze large amounts of data. These platforms provide powerful tools for decision-making across industries such as finance, healthcare, energy, and other sectors that rely heavily on complex datasets. By providing advanced data integration and analytics solutions, Palantir has carved out a unique position in both government and enterprise markets. The company's growth in the stock market this year has been extraordinary. Palantir's shares have climbed by more than 112% since January, a performance that has outpaced many other well-known technology stocks. This rise has been fueled by growing investor confidence in the company's ability to expand its role in artificial intelligence applications. Palantir is not simply a technology company with a single focus, it is positioning itself as a bridge between artificial intelligence, data analytics, and real-world problem-solving in both defense and enterprise environments. Salesforce Chief Executive Officer Marc Benioff recently offered his perspective on Palantir, and his comments have added another layer to the conversation. He praised Palantir's unique business approach, especially its premium pricing strategy and its forward-deployed engineer model. In this model, Palantir embeds highly skilled engineers directly with clients before finalizing a contract. This allows Palantir to provide tailored solutions that directly match a client's needs, and it strengthens the company's ability to justify premium pricing for its services. This model is not common in the software industry, and it shows why Palantir has been able to stand out among its competitors. Benioff also pointed out the impressive market valuation of Palantir, which recently stood at around $310 billion. He highlighted this valuation as especially notable given that Palantir's revenue guidance is slightly above $4 billion annually. To put this in perspective, Salesforce itself generates around $41 billion in revenue each year, yet Palantir has still managed to achieve a valuation that commands attention from the investment community. This contrast demonstrates the faith that investors have in Palantir's future growth potential, especially in artificial intelligence-driven fields. Despite the recognition, Benioff acknowledged the intense competition that exists in the race to win government contracts. He revealed that Salesforce had recently secured a major contract with the United States Army, a deal that Palantir had been competing for. Even though Salesforce came out ahead in this particular case, Benioff emphasized that Palantir has proven itself capable of maintaining high prices for its specialized services, which speaks to the strong demand for the company's expertise. Palantir's growing importance in matters of national security has not gone unnoticed by policymakers either. Reports have surfaced that the Trump administration has considered taking an ownership stake in the company. This would be similar to the approach taken with Intel, where the government sought to strengthen United States technology and defense assets through direct support. If such an arrangement were to take place with Palantir, it would mark a major recognition of the company's role in safeguarding the country's technological infrastructure and defense capabilities. At the same time, not all voices in the market have been optimistic. Citron Research has maintained a bearish view of Palantir, labeling the company as beyond overvalued. They have even gone as far as setting a target price of $40 for the stock, which is far below its current trading levels. Citron's position has sparked debate among investors, with some agreeing that the stock has run up too quickly, while others argue that Palantir's unique positioning justifies its current valuation. When you put all of this together, the story of Palantir right now is one of both high praise and sharp criticism. On one side, you have analysts, television personalities, and high-profile executives like Marc Benioff expressing admiration for the company's growth strategy and influence. On the other side, you have short sellers warning that the stock price does not match the financial reality. This tension has made Palantir one of the most closely watched names in the market. For investors, the key takeaway is that Palantir continues to build momentum in artificial intelligence and government contracting, even while some market participants remain skeptical about its valuation. Whether you believe Palantir is poised for further gains or due for a pullback may depend on how much weight you place on its rapid growth in artificial intelligence and national security compared to concerns about its financial metrics. In the end, Palantir Technologies has gained over 108% this year, though it has recently slipped by about 2.5% after a short seller report questioned its valuation compared to OpenAI. Jim Cramer has strongly defended the company and praised its chief executive officer Alex Karp, while Salesforce Chief Executive Officer Marc Benioff admired Palantir's premium pricing strategy, its forward-deployed engineer model, and its $310 billion valuation, despite revenue of just above $4 billion. Palantir's Gotham and Foundry platforms continue to drive growth through government and enterprise contracts, particularly in defense and artificial intelligence applications, though competition for contracts remains fierce as Salesforce recently won a United States Army deal over Palantir. At the same time, Citron Research has kept a bearish outlook, calling Palantir beyond overvalued and assigning a price target of $40, leaving the stock both highly praised and sharply criticized. With that being said, I will see you in the next video.